Welcome to this edition of Money in Motion video blog. This is Dan Perkins and thanks for watching. Well, it's been an interesting kind of a roller coaster ride over the last few days. Down 300 on Friday, up 178 on Monday, down 328 on Tuesday, and we're up about 35 this morning. Volatility, which I cautioned you about, is with us, and it's going to be with us for a while. There is so much uncertainty in the world, nobody knows for sure what's going to happen. It looks like the predicting that I had that the dollar and the euro would find parity at 1-to-1 is happening, but it's accelerating to the point that it's 105 this morning, probably ahead of everybody else who thought it was going to happen. So it's possible that we could have parity on the euro within the next 30 to 60 days. That makes the dollar even more strong. The dollar is up against all the major currencies in the world, significantly so. Broke out against the Japanese yen on Monday. And so the dollar is king. People are concerned about what's going to happen with the economy, and based on the job numbers on Friday, the purported sell-off was a function of what's going to happen to the Fed and their desire to want to raise interest rates. I do think it's important that we take a look at what's happening to our key indicators. So let's start off with oil. As the chart shows, oil started the year at 53.80, and we're down to about 49 and change, off almost 7% for the year. Next, let's look at gold. As the chart shows, gold was 1,190 at the beginning of the year. It's 1156 right now, down almost 2.25%. And then the last thing we want to look at is the chart on the 10-year Treasury. Started the year at 212, it's around 216, so marginally unchanged. So no indications of inflation concerns, no indication that the economy is going to accelerate, and so things are fairly stable in our three areas. The question becomes, where do we go from here? As I said, I thought the dollar was going to continue to strengthen against the euro and other major currencies. So look for 1-to-1 on the euro. Look for maybe as high as 125 on the Japanese yen, and maybe as low as 145 on the British pound sterling. Stronger dollar would give demand for our treasuries, so I would expect to see interest rates to fall. I also expect to see gold to fall because there's no real inflation fear. I'm amazed with all the turmoil in the world, though, that gold hasn't performed better, but it seems to be losing its luster. I expect to see the markets probably to trade within a range. And speaking of markets, you should have received your February statements by now, and as a result, you're looking at your statements. If you look at the ending value of December and the ending value of February, add back any distributions you've got, and in many cases you're going to find your returns outperform both the S&P 500 and the Dow Jones by almost double. As I said in our last video, some months will have up returns and some months will have down returns. So for 2 months in a row, we've had positive returns. I look for volatility to continue. I think it's important to understand that we can't make decisions. I know it sounds like a broken record, but we don't make decisions based on the emotions of the market. The fact that it was off 328 points yesterday doesn't change the fundamental belief of what I have. One note of caution is that I believe that the most volatile complex at the moment is energy. I wouldn't be surprised if we go back and test the previous low at around 44, perhaps even lower, and a new low, near-term low for Brent North Sea crude also. So that energy is still going to be continued to volatile, and I think that energy will be the key. Once we settle down and we get clear direction of economic growth on a global basis, we'll probably see some energy price recovery. Right now, we just get paid. So that's it for now. So if you have questions, feel free to give me a call. If you have friends or family who are looking for a real money manager, have them give me a call. This is Dan Perkins, and thanks for watching.